this is a foundational transformation we see happening in the economy.
DeFi and blockchain are redefining business, the economy, and our society. Hey everyone, welcome to another episode of the Redefined podcast. I'm your co-host, Jeremy Almond, alongside my awesome friend, Megan Guy, talking about all things blockchain and how it's impacting society, culture, and our economy. What's up, Megan? How you doing today?
I'm good. How are you?
Oh, I'm not too bad. We have an awesome guest on today. My good friend, Sarah Shi. She has been part of all kinds of really interesting blockchain companies. She's worked at BitGo on the institutional side. She's worked with me in a prior life. And today she's working on a super cool project called Rubicon Carbon. So we're going to talk about all kinds of stuff. So what's up, Sarah? How you doing? Thanks for being on the show today.
Great. Happy Friday. Pleasure to be here.
All right. Well, so I want to start off maybe the conversation because you spent your career on the product side. So you've been chief product officer for quite a few of these blockchain companies. And one of the areas I think that, we talk a lot about is the actual practical use cases of blockchain and getting it out more in the real world and the scale around it. And so somebody who's spent a lot of time thinking about just the user side of blockchain, the actual implications, I wonder if you could talk about kind of the state of blockchain at the user level, the state of product building, because a lot of times I think some of the blockchain products are still quite clunky and they're not actually at scale for the user side. So maybe give us some thoughts around that as a product expert.
That's a great question. Throughout my years building products on the blockchain, I think the biggest challenge and the biggest opportunity is actually to encourage mass adoption. And how do you do that? It's actually not build a product that require a lot of technical skills to use. My goal is always to make blockchain a technology enabler behind the scenes and make the user experience real and friendly. People who are technical can get to the nitty gritty of how it works, but people who just want to use it, whether they know a blockchain is behind it or not, doesn't really matter.
Is your view, this is predominantly kind of a UI UX problem that once we solve that, we'll see broader adoption? Or where are you kind of seeing the sticking points right now with consumer companies?
It's UI UX, right? But it goes deeper than that. So I give you one example that I deal with currently in my day job. I work at Rubicon Carbon. I'm the chief product officer. So a little bit background is we provide risk mitigated portfolios of carbon credits in a voluntary market. But as we look at it, we were thinking about, okay, do we build it on blockchain? Do we build it off blockchain? But what's more interesting is the actual use case, right? You look at the actual use case, some people care more about what they can get from the actual credits to offset their carbon footprint. Whether there is a token behind it or not may or may not be important. And there are always institutions who cannot hold tokens. So as we look at the product portfolio, we actually offer a version backed by token and a version without token and kind of test the market to see which one gets more traction. Of course, it's going to evolve with, the macroeconomic condition, the state of crypto in this country versus outside of US. So as a product person, I think the best we can do is to provide that flexibility and test the market a little bit and give customers the option. And another thing I want to touch upon real quick is giving people the reason, right? So if we want to encourage token usage, then you need to really highlight the benefit, and that is up to the product person to create and market.
And Sarah, can you talk a little bit just for folks who may not be as familiar with Rubicon, who are your customers primarily? What's their level of sophistication and what are they really looking for?
It's B2B, right? Large corporations looking into the voluntary market to offset their carbon footprint. So they're looking for ways that they can get access to high quality carbon credits and mitigated risk, right? Because overestimating is quite common. And what we provide is at portfolio level to diversify and also mitigate the risk should certain projects overestimate.
I don't know if everyone is familiar with just how the energy markets work in general and how carbon credits work in general. So how does that work outside of the blockchain? And then why might, whether it's token enabled or just blockchain enabled? Where do those worlds interact for those of us who, haven't spent our careers on the sort of energy and renewable side of the world?
I actually started my career mostly focused on renewables, on carbon, and led some of the carbon trading and kind of carbon project work with the Nature Conservancy, which is one of the world's largest conservation organizations. And at that time, we were doing something in some respects quite similar, Sarah, I think, to what you're offering, but very, very analog, right? So as our projects would generate credits, we would often sell them, or we would sell them forward to some of these same customers that Sarah's working with, big companies that were looking at both offsetting, I think, their carbon footprint, but also in many cases looking for kind of strategic projects in geographies that were relevant to them, or that touched on some of the community elements that are really important to carbon projects that tied into what they were doing. But this was all very, very manual, right? So it was literally like me getting on a plane and going to talk to someone at one of these companies, or getting on the phone. When we talked about pricing, it was kind of the same thing. It's sort of like stock trading was, I guess, 40, 50 years ago, something like that. That's kind of what we're coming from. And tell us sort of what's the state of the art? What's the world look like now?
You need to set a price for carbon, and the pricing mechanism can be opaque when you don't have a highly liquid, efficient market. And that's where, or at least our assumption, right? If token is great for trading, and it creates a very liquid market and makes price discovery easy. And the other part that kind of automates the product with token is the minting and burning process makes carbon credits retirement easier. Now, we still need to burn the token and then retire them at the registry, right? That part you can't get around, so that there's transparency and accountability at the registry level. I know some of the largest registries are working on blockchain initiatives to move that tokenization to the registry level. What we can do is giving our customers the tools, right? Whether they want to retire directly with us in product, or they can get the tokens, and when they're ready to retire, they'll burn the tokens with us, and then we'll retire for them on chain. So it's still a two-step process, but I think what is blockchain, right? Blockchain at its core is a secure, immutable database. It provides transparency. So you can apply that to the carbon market, where you really need to make sure the credits are actually retired and never in circulation, and blockchain is a great tool for that. And it can apply to some other real world use cases. One example that comes to my mind right away is real estate, right? Title search, it's the same thing. It historically is labor intensive, but if all the transactions related to the same property is recorded on the blockchain, then you can look it up very easily and verify in 15 minutes rather than like days or months.
In the real estate case, though, one of the critical things, at least in emerging markets, is the not only is it labor intensive, but actually just what is the source of truth in general. There's a dispute about a title record, and that title record is, filed in 1960 somewhere in some back office, in the middle of Honduras. Who actually owns the title, right? So I think there's an infrastructure sort of cosplay, but then there's also sort of a, sort of proof of ownership perspective, right? And so you get both the economic side and you get the infrastructure. That's what the two things come together and are very interesting. Healthcare is another area, I think, Sarah, you spent some time around, and healthcare is kind of another similar case, right? Where there's real world enterprise uses where you actually need both proof of ownership and kind of sort of infrastructure efficiency.
Yeah, healthcare is interesting because there are a lot of PII data. Privacy is important. So how do you verify a piece of information without revealing the actual data when you don't need to? So zero knowledge proof is actually not a new concept, right? It was coined in 1985, but it's a cryptographic method. Blockchain makes it a lot easier to do zero knowledge proof. There are layer ones that support that. So in a healthcare case, you can verify if a patient has had this condition or that condition, but the underlying information can be kept secret, which is really important. one example, one analogy I like to use to explain zero knowledge proof is there's a tunnel and there's a door in the middle, right? So let's say, Jeremy, I want to sell you a key. I know I can tell you I know the passcode to get through the door, but you need proof of me actually knowing the passcode. But how do I not telling you the passcode until you pay, but still prove it? So I can have you observe and I'll enter the passcode so you know the door can open, but that piece of information is kept secret.
So the key discussion is really important, I think, because who owns keys is also, in the news a lot. And one of the areas, maybe if we make this turn from the uses to how does this get done in the real world, you've actually spent quite a bit of time at institutional custodial companies where, they actually hold your keys. And we're talking about big company use cases, whether it's in carbon credits or it's in real estate or it's in the medical situation. And so I'm wondering what the role of some of these folks that are behind the scenes that you've worked with before. So whether it's a Prime Trust or folks like that are kind of big players behind the scenes, but they don't interact with consumers. So what's their role? How do the institutional custody kind of companies play a part in this value chain? And then how does that connect to things like the keys that you're talking about that the user ultimately interacts with?
So in the institutional world, I think up till recent events unfolded, people don't really look at it, right? Because consumers like you and me, like who owns the key, people didn't think about it until now. Because when you look at the world, there's the qualified custodians, right? So they can manage the keys on behalf of their institutional customers who then serve the consumers. And there's self-custody platforms like Fireblocks. So the keys are managed by their customers, but the technical platform is provided. So the institutions that serve consumers still manage the key themselves. So as a consumer, you really do need to think through who owns the keys. Is it the institution you're dealing with, or is there a qualified custodian who will manage it for you? And then it also goes deeper than that, right? It's the keys and it's also the wallet structure. So is your crypto commingled with other consumers' crypto? So if there is a run on the bank situation in the crypto world, do you have the first right to access your crypto if they don't have sufficient balance? But if it's a commingled situation, that makes it really hard. Versus if you're in a segregated wallet, then it's not easier because you know what's yours is in its own wallet and kept safe by its own key, right? So that's a much better situation. I think because crypto is hard to understand for a lot of consumers, historically, people don't think about that much. To them, it's just having a password to log in and look at the balances. But recent events kind of really highlighted the need to understand the mechanics of how everything works.
Yeah, I mean, just another example, very recent events, right? the SVB collapse. We had a number of portfolio companies that banked with SVB. Were pretty quickly able to determine actually their assets were quite safe because most of them they had in sweep accounts, and those were actually managed and sat on the balance sheet of a big institutional money manager. But we had this exact issue kind of around keys is not the right technical term, but if SVB as kind of the intermediary there is no longer in the picture and collapses, how do you get direct access to your funds? Your funds are safe, but we had those exact discussions around, are they commingled, and how long is it going to take sort of to sort that out and to enable these companies to get direct access to the cash that, sits on a Fidelity or UBS or someone like that's balance sheet in one of these sweep accounts. And so, I think even in kind of a Web 2 world, companies are now starting to really think about and have to understand that whole chain of access and where the risk lies if some of the folks in that chain either don't exist or have problems or are bad actors, as we've seen in other instances.
That's a very good example. I've been thinking a lot about that. So when you have a custodian and you have these exchangers that use custodian to safeguard crypto, you still have intermediaries, right? So if we push it to the extreme where we say, what if it's completely DeFi, right? You keep your own key. So not your key, not your money, but it's your key. it's safe because you know it's in your self-custody wallet. The problem with that is you need sophisticated consumers because people will lose their key, then they completely lose access to their money or crypto. But it's a very interesting idea to ponder about, right? Because DeFi does give you the tool to completely take out intermediaries. So you don't have to worry about it's a technology version of money under your mattress. But then you need to really educate your consumers.
There is kind of a middle ground though, right? Like the other thing that makes it so interesting as programmable money is, you actually can have multiple keys, right? So there is a technology mechanism for having owning your own keys, storing that money under the wallets, under the mattress, so to speak, while at the same time having an institution that has backup access to it or whatever. So there are providers like that. So, if you were to kind of redo the SVB case where your sweep account money is sitting in, treasury somewhere, and you can't access it because the counterparty is broken or down or whatever, you could still access it, right? That does actually exist in Bitcoin and blockchain. It doesn't really exist in the financial industry, right, Sarah? And you kind of understand the technology side of that.
Yeah, exactly. And there are also a lot of insurance providers. They basically keep your backup key safe, right? So there you go. Maybe we should go build money under the mattress wallet.
Fair enough. What is the role of renewables and sustainable energy in the blockchain? There's been a lot of conversation in general. Is it green? Is it not? Sarah, you're now working in a place where that's an important part of the mission. Where's the role of mining costs and this sort of thing?
The most recent Ethereum upgrade just draws more attention to Ethereum, right? It's now completely proof of stake and super energy efficient. I think it goes deeper than that though, because Bitcoin network, I think the mining cost is like, don't quote me, but I think it's roughly like one average American household's like for 13 years energy use. So that is really high. My way of looking at it is to reverse climate change. You actually need to actively take CO2 out of the air, right? Renewable energy alone is avoidance. You just avoid emission. That doesn't really contribute to taking CO2 out of the air. So I think to really reverse the climate change and stay under 1.5 degrees Celsius, we have to actively look at removal. And that's where I think the carbon credit projects are most interested in, because we need to do more than avoidance. Avoidance is great. That's a start. But
yeah, and so just to clarify, we probably should have talked about this a little bit at the beginning. But, these projects like you were talking about, I was talking about, we were doing at the Nature Conservancy, that's sort of the sort of thing where you're going and you're reforesting an area, right? Or you're protecting a peatland or a wetland that otherwise would have been filled in and developed. These are really important carbon sinks that actually, remove and store CO2 and actually are a pretty significant portion, I think, of like the path to get us onto that 1.5 degree trajectory. I mean, I think years ago, kind of when I was in this work, that the estimate was sort of 20% of what we needed to do in order to get to 1.5 degrees, you could do through, natural climate solutions, as we call them. So sort of investing in nature, investing in conservation.
I'll give you a couple examples of projects I've connected with lately. I was in Guatemala, I don't know, maybe 2 weeks ago or so. One of the projects we looked at there was this active, basically statewide, trash dump. And, in a lot of these emerging markets, it's just a pit in the middle of the ground. And you have water runoff that comes from the mountain that goes through, that trash area. And then it unfortunately pollutes the drinking water that goes through the villages that are downstream. And then ultimately the lake, which is kind of a big source of, their economy. And one of the things they were doing at that particular project was they're taking sort of the off gas from methane from, that location. And then they're using it to power Bitcoin mining that then sort of drives some economic sort of improvement for the local villages. So there are cases where that renewable growth actually does, with economic indicators too, can actually have positive impacts as well. The last study I saw from the NASDAQ is the vast majority of proof of work and Bitcoin mining in general is actually done on renewables. And it's 50 times, according to the NASDAQ study recently, 50 times less energy usage than the current banking system, right? So there's kind of a practical question besides the on the offense question, right? So do we agree both are true, or is that practical question sort of at odds with the, sort of taking carbon out of the air as well?
I don't think they're at odds, right? It's just we need to do more than renewable. Like I said, renewable is a great start. Kind of makes me feel better when I'm sending Bitcoin to someone, but we need to do more than that.
Yeah, I think it's a question of scale. And like often I find, folks who care a lot about climate, but haven't spent a ton of time in the space and actually like understanding the numbers and like, what is a ton, right? What does a degree represent in terms of tons? And what are the places, it is kind of an all of the above solution that we need. There's not kind of one technology or approach that's going to get us to the scale of transformation we need to kind of solve the climate crisis in and of itself. And so there are some really wonderful reuses actually for pulling CO2 out of the air. I mean, there are companies that are taking it and turning it into cement as an example. And, and those are all, I think, really interesting and great. And obviously if the economics work, like even better, right? When there's a market pull, but we're in sort of too deep of a hole to get there, I think, on only the stuff that is, win-win-win for everyone. Like there's going to be some pain involved. And whether that's, dollars or adapting, as we're seeing already, to some of the change that's happening where, people can no longer get insurance if they're in super flood-prone zones and they may have to move or they have to rebuild with much more expensive, technologies and materials and whatnot. And living there becomes a much, much more expensive proposition. Those are kind of, I think, the trade-offs that at the end of the day, we're all going to have to start thinking about, as much as, we'd love to keep finding the solutions that let us have it all.
Megan, I think you hit the nail on the head, right, with the if the economics work. So the ability to assign a price tag to carbon credits, whether it's voluntary market or compliance market, that really helps with the making the economics work, and it will incentivize business to reduce their emission and offset their footprint. So that was kind of the premise we were playing with and try to validate is what's the best way to create an efficient market to assign a price tag to carbon credits. Whether the technology enabler is blockchain and tokens or it's not, we'll find out.
How would the token work in this case, with viable carbon market? Because that is, not everything's a win-win, but this might be a win-win-win, right? So what is the mechanics of that, Sarah, and how does the token actually interact with the market?
On a very high level, if we create a marketplace, blockchain backed by blockchain, and token trading is really trade execution and settlements a lot easier than a traditional marketplace, right? So it's just much more efficient technology tool to build a marketplace infrastructure. Then, if trading is easy, then you get price discovery kind of as a natural benefit. So that's one way. But you can also, people have been trading without a blockchain for decades, okay? So you can also argue, I can just build a marketplace without blockchain. So do I need blockchain for the marketplace or not? It goes back to my initial argument that the product needs to shield the end user from the technology enabler, right? So whether it's blockchain based or not, it doesn't matter as much as long as the market activities is what customers need and price discovery becomes easy. So I think it is up to the product person to make that almost transparent to customers.
Sarah, can you talk a little bit, how did Rubicon Carbon kind of get started? Because I know, some of your colleagues come out of traditional financial markets. Like, it's obviously an innovative approach to financial markets, and it's also kind of an innovative cutting edge space to be in. And so what was sort of the prompt?
Our investor look at the market, the ecosystem, and what's needed to really reverse climate change. An efficient marketplace to make price discovery very easy and assign a price tag to carbon is needed. The other thing is quality is first and foremost. It's like the cornerstone of why we build the company. If you look at the most recent headlines, a lot of the voluntary market headlines and negative coverage is around quality of certain projects. So we wanted to come up with a solution that can really address that. So how do you do that? You come up with baskets of carbon credit projects, and you invest in scientists who can really vet these projects. And through a basket approach, we can diversify the risk. And also, we actively manage it. So if certain projects have issues, we can swap it out. And also, when we have customers who come to retire the Rubicon carbon tons, and certain projects overestimate it, we actually over-retire credits for them, right? It's not we don't just look at our bottom line, right? I think the quality is more important, and that's the value proposition of Rubicon carbon tons. So we've done that. We actually over-retired for some customers to make sure they always get the ton they pay for.
Sarah, as you describe what you're doing, today in Rubicon, I also know, it's sort of a double bottom line business. I don't know if they think about it this way, where there can be an important business and an important impact on the world. You also, you're quite involved in other kind of socially conscious projects like water.org and others. Do you see a role for blockchain in sort of other, sort of socially conscious NGOs and other spaces? Or really, do you think it's got to have market-based approaches to have sort of clear impact for organizations like that?
Me personally, I love market-based approach to solve, environmental problems. So Rubicon is exactly that. Water.org is also a very market-driven solution, right? Just on a very high level, how do I summarize that in a minute? Water.org raises funds and then use that to help microfinance institutions all over the world to come up with loan programs so people can actually borrow and build their own access to water. And the loan repayment rate is over 99%. That's incredible. So some people may ask, well, why do you lend them money? Why don't you just give them money? By coming up with a loan program, the donor dollar goes a lot further. So for every $5, you can give a person access to save water, because it's a lot more cost efficient to teach someone how to come up with a loan program and lend it to people. And the local finance institutions actually profit too, right? So it's a win-win for everyone. So I think in general, that's a better approach to tackle all the environmental problems we're faced with.
Yeah, and the common thread you're talking about in both those cases is there's multiple stakeholders, right? So that's another area where probably blockchain is quite strong, is where there's market-based cases where there's multiple stakeholders downstream. And so how do you sort of drive incentive and behaviors downstream for, the incentive action that you want to occur? And so I think we're still in really early days with that. I'm excited about what Rubicon's doing. Be interesting to see whether water.org or others, sort of can take some of the learnings.
Water.org, let me put it this way, actually accepts crypto donations. It was very interesting at the peak of crypto. People are donating NFTs and crypto, and that's how I got involved, because in the end, for them, they need to convert it to fiat so they can use it. So they came to me and they're like, well, what do I do with these things? How do I convert it to fiat? It's you really get to see where technology and crypto converge with the traditional finance world and create opportunities and challenges for nonprofits.
Yeah, that's a really interesting use case, right? So a lot of nonprofits will get, a traditional art donated, and they've got to do that same transfer. And you're saying there's new assets that get donated. And then for me, I think one area I'm particularly excited about is at some point, maybe those conversions don't happen downstream. So, if you're in the frontier market, like I was just describing in Guatemala, and you're doing a water project, those villages actually may be, sort of natively operating in some circular economy in Bitcoin or something else. And so they actually can flow all the way through, which, that does not exist at all right now. And it could be a kind of a compelling area of growth from one side of the market to the other.
Yeah, definitely. Kind of tangentially, I think I do see more crypto adoption in developing world when I was working at Prime Trust, mostly because their traditional financial infrastructure is so fragile, right? You get run on the bank way more often than developed world. So it's much easier for people to pay each other in crypto because they have access to it. People may not have a computer, but the rate of people with a smartphone is actually really high. So anyone with a smartphone, you can actually have access to your assets and you can use it to pay. I think we also see that in Ukraine, when people had access, were having trouble to withdraw money from their bank, the payments made in crypto just skyrocketed.
Yeah, much lower barriers to entry, for sure, for people who've been shut out of kind of traditional banking institutions, or as you said, like in many cases live a long way and don't necessarily have transportation to a branch. The notion of something that just lives on your phone that doesn't require you to go visit or do the wet signature and all those fun elements of kind of traditional banking systems.
I think we just covered like saving the planet in multiple vectors, right? So we're talking about saving the planet from carbon. We're talking about saving the planet like down in water and other social good, and then now in financial inclusion. So it's kind of an inspiring episode, Sarah. So thank you for inspiring us. Where can people find you? Where can people reach out if they're interested in any of these causes, whether it's Rubicon Corp, Carbon, or water.org, or just all the cool stuff you're up to at the product level at blockchain is I think one of the best thinkers and practical use cases of blockchain today.
I'm on LinkedIn. I check it actively and I post whenever time allows. So hit me up on LinkedIn.
Sarah, this was awesome. Megan, man, how did we save the world today? Did we do some good?
If we get our listeners, I think, thinking more about how their technology impacts the planet we're living on and the things they can do to try and make a difference, then I feel like we've done our part for today. So
that's it for another episode at Redefine. Find us on YouTube, Spotify, Apple, and wherever the heck else these things exist. Thanks, Sarah. Thanks, Megan. We'll see you again quite soon. Cheers, guys.